Welcome to Let's Talk Business. I'm your host, James Price. This podcast has been designed to address business pain points, often neglected, but if dealt with correctly, can really enhance business value and performance. I've had over 30 years experience in business, and I currently own JPO Business Proprietary Limited, a business valuation, advisory, and transaction firm. We help private business clients across Australia and internationally grow, change, and enhance the value of their businesses. Welcome back to the Let's Talk Business podcast. I'm your host, James Price. And this is episode 14. And my guest in the house is an intriguing opportunity to meet Emma Weston. Emma is co-founder and CEO of AgriDigital, a payments and security contractual business associated with the grains industry, but I probably haven't described that as well as Emma will. Digital technology, a fintech if you like. Emma's a student of business, technology and startup world, and I think there's a lot to learn from Emma's journey to date. Welcome, Emma.
Thanks for having me, James.
Yeah, it's great to have you on board. I'm really excited. We've known each other for a while, right?
We have, and we've talked about this for a while, so it's great to finally be here.
Yeah, it is. It's good. Good. You're sporting a little horse injury.
I am.
There.
I'm just going to hide that.
Yeah, no. I'm sure we'll edit that bit out.
No, we can talk about it. I'm cool.
Well, it's been a bit of a challenge, right?
It's part of the reality. Yes. So yes, to get that one away, I was unfortunately kicked by a horse on our family farm a few months ago, and ended up breaking a lot of bones and sustaining quite a few injuries. So I have a newfound admiration, if I didn't already have it, for our nursing staff, our hospital staff, our medical staff and support. I was in Dubbo.
Dubbo Base.
Dubbo Base, so shout out to Dubbo Base Hospital.
Shout out to Dubbo Base Hospital. And said horse is on farm in Warren, is that right?
Yes, we have we live on our farm actually. We've moved back to the farm. So
have you really?
During COVID we did our lockdown on the farm, which is a little pocket of what was originally my husband's family farm. So we stayed there during our lockdown, which we just thought was
the place
amazing.
To be.
It was the place to be. Yeah, it was the place to be. But we've just loved it so much, and I think the opportunities that have opened up, not just because of COVID, because I think we're all sick of saying that, but just by recognition of what we can do with the technologies that we have these days, what we can do when we operate, with trust with each other, has meant that I can now work from the farm.
Which is pretty neat, right?
It's fantastic.
So Warren is a grain producing area, grain and livestock,
yeah? Yeah, grain, cotton and sheep, I guess, is the backbone. But, increasingly there is tourism is a reality now. So, a lot of travellers around the country. We certainly, another shout out to the grey nomad population and the families, exploring Australia. So we certainly welcome them. And increasingly, and I think this is going to be a growing part of, all of these beautiful parts of regional Australia is, I guess, stewardship of the land and connecting to environment. And so we have the Macquarie Marshes not far away, and wetlands and
which
bird
is
life.
Which is an amazing environmental
incredible
area, right?
Yeah, incredible. Yeah. So we're lucky.
Yeah. So Bob is your life partner, but he's also co-founder of AgriDigital, right?
He is, yeah. We've got a third co-founder too.
Have.
So I better mention Ben Reid.
Mr. Reid.
We're definitely a trio.
Yes,
absolutely.
You are. Yeah.
No, but Bob and I and Ben have actually worked together as a trio for well over 15 years now, I think, in various business iterations.
Yeah.
And Bob and I have worked together. I mean, actually, it's kind of funny. I always joke that our default, we met at work.
You met at work.
It's an age-old story.
Oh no, it's a work relationship.
Yeah, it's an age-old story. So we met at work. Therefore, somewhat fortunately, unfortunately, our default relationship is work.
Yeah.
Which means it's been fine. It's not for everyone. I get that.
Yeah.
And we might even get onto it at some point.
Yeah.
But when we have pitched to investors for capital as at different points in time, particularly in the US, actually, we had a couple of venture funds say we don't invest in husband-wife teams. So that's a hard no.
Kind of interesting.
We like what you're doing. We love the space, but just it's a hard no on the husband-wife team. And actually, we produce a lot of life partner and husband-wife teams in Australia. So
yeah,
US, I think you're missing out.
Isn't that interesting, though?
Yeah.
Well, let's get back to that. But firstly, this AgriDigital.
Yes.
What does the company do?
Yeah.
Help us understand. Help us unpick that, because I had a go at describing what it does, but I think it was a bit sloppy, to be honest. And I think the CEO will be able to tell us.
I would like to think that I can do the job on this. Yeah. So Ben, Bob, and I started AgriDigital in 2015.
Yeah.
We really started it with the vision that we wanted to bring digitisation to the grains industry. So we were looking at what was happening with cloud infrastructure, digital software and other technologies, and thinking about what that was going to mean for the grains industry and the grain supply chain, which was incredibly fragmented, involved, no pun intended, but silos of data that were not connected and were often replicated at high levels of inefficiency across the industry, and was really characterised by, pardon me, oodles and oodles and oodles and literally millions of pieces of paper, and not just millions, across the whole history of the supply chain, but millions every year. And so, when we thought about what digitisation was going to do, we could easily see it was going to replace manual, and we were going to be able to take and put in place a platform that effectively digitised all of those manual workflows, all of that data collation, and made that available in a connected way across the whole supply chain.
So what problem were you wanting to solve, or were there a number? Like on the
there
one
are
side,
a number of problems.
I get a feel that there's an efficiency issue with what you were wanting to do there in terms of, let's say, automation. But is there also a security issue?
I think the biggest thing that we do is take out risk from the supply chain. So, when you have highly inefficient workflows across a whole supply chain, they may be efficient at a workplace, but across a whole industry, they're actually inefficient. When you have massive amounts of duplication and replication of data, you have a lot of opportunity for things to go wrong. When you have fragmented connectivity across the supply chain, you have a lot of opportunity for fraud, for mistake. And what does that mean? Well, in particular, it actually stops access to capital, because capital doesn't like that type of risk.
Well, because it doesn't like risk. It doesn't like being exposed to that.
And it doesn't like what it can't quantify. So, what we saw was not just the opportunity to take out the manual element. I mean, that's nice and that creates efficiencies and it lowers costs and speeds up operations. But in particular, what we wanted to solve for was inequitable access to capital.
So does that mean if I put myself in the shoes of a grain farmer at Warren, for instance,
why not?
Or, I don't know, Corrigan in WA or wherever. Does that mean that AgriDigital and what you do has brought more interest and exposure and money into my grain market? Is it more liquid as a result of what you do?
I think it can be more trusted and transparent as a result of what we do. The liquidity was probably always there. It was just somewhat hidden. Whereas when you have a digital platform which everyone goes to in order to transact and to create what is effectively a digital twin of the physical grain, and then that digital twin moves through the digital supply chain.
Well, help me, Emma. Help me.
We might have to come back to that.
That's interesting, right? So you're saying the grain is a physical product, right? Like, you know, our listeners and viewers will understand what grain looks like.
Yeah,
you know? It moves from grain to Uncle Toby's oats, so to speak.
Yes,
you know?
yes.
So your system is creating a digital twin of that grain.
Correct.
As a parcel or a holding.
Yep.
And then, help me from there.
Yeah, so what it does is where AgriDigital takes over, and we're not farm technology, we don't help grow the grain. So we don't do that. There are lots of other technologies that do that and do that really well and help with yield and weather management and, you know, chemical management and a whole lot of other things. What we do is once the grain has been harvested, the gap that we saw in the market was connecting that grain all the way through the supply chain so that from the moment it was in the paddock to when it ended up at Uncle Toby's or a bakery or a feedlot or wherever it may, or, you know, on a ship going overseas, that we had a complete record of everything that had ever happened to that grain. And so that can be provenance for sure, you know, right? It can be, but sometimes it's just very plain transactional and pricing information. But being able to record that full history for that parcel.
With a push of a button almost.
Yeah, absolutely. So, you know, what do people do on our platform? They are literally executing their buy-sell contracts. They're doing all of their invoices and payments through the platform. So I think, you know, the AgriDigital platform has now processed something like $9.5 billion worth of grain payments.
In how many years?
Well, we commercialised in 2017, so year 6.
Wow.
Yeah, we're on year 6. Yep.
How much again were you saying?
$9.5 billion.
Yeah, that's quite a lot, eh?
Yeah, it's good. It's good, I think, you know. And so, and the biggest, by far, 99% of what we do is in Australia at the moment. So we're quite Australian focused.
Yeah.
But obviously the global industry is, you know, huge, and there's a lot of potential for what we do, but we are quite Australian focused at the moment. So what else happens with grain? Well, it needs to get moved. So there's whole logistical arrangements that need to happen. It needs to get stored. So the storage and the records of storage and the title to that grain, so who owns what, is incredibly important in a commingled supply chain. So grain is obviously, everyone's grain's all stored together.
So when you say commingled, it's a bit hard to find my grain versus other people's grain because they look all the same.
That's
right?
correct. Yeah. So what you have is effectively a right to a type, an amount, a quantity of grain of a certain quality.
Yeah.
And that's what you have a right to in a commingled supply chain.
You
don't have the right to the actual grain that you delivered in because obviously we lose that. That gets all kind of, it's all in a big stack or all in a big silo. But what we do at AgriDigital to help preserve, I guess, and that trust and transparency is manage that commingled ownership so that in a stack we understand who owns what, how long it's been there, what's the average of the stack in terms of quality, and so that really helps then outturn the right grain onto the right contracts at the right time, and importantly connecting it back to the finance piece. It means that if I'm confident on who owns grain, then I can actually use it as collateral. And the collateralization of commingled supply chain assets has traditionally been an incredibly difficult problem to solve for.
So when you say the finance piece, do you mean that I've got some grain stored, I'm a farmer, I haven't sold that grain necessarily, or it hasn't been delivered, but there might be a contract backing it for a future sale. So there's an opportunity because you've identified that grain and it's in a commingled parcel, but it's got a digital certificate, if you like. I hope my terminology is
that's fine.
There or thereabouts. You can actually assist someone finance that in advance.
Yeah, the reality is you have an asset. That asset has not traditionally been able to be used as collateral because it's not separately identifiable like a bale of cotton or a bottle of water or whatever it may be, right? But so if you have one big pile of grain and 20 people own that pile of grain, how do you finance it? Now, if you have that grain stored in a trusted physical storage
Yes.
with a digital overlay over the top, that suddenly becomes a lot easier, because the confidence that the financier has that the grain is actually there, and that we understand the quality, the quantity, and that quality and quantity is being maintained throughout the life of the loan or the advance that's been made against that grain, all of a sudden that becomes a more confident situation for a financier. So less risky, back to the risk argument.
So who are your customers? Are they down and dirty farmers, or are they grain traders, or are they end users, the feedlots, the bakeries?
Yep.
Or are they all of those?
All of them, yeah. The supply chain is our customer. We're de-risking the supply chain. And so any participant in the supply chain is a customer of AgriDigital, a potential customer of AgriDigital. But the problem for each customer can be slightly different. So back to the problem statement earlier, there's a problem statement for the supply chain. That's what we solve for.
Yes.
But at a persona level, whether I'm a farmer or I'm a trader or I run a poultry operation, or whatever it may be, right?
Feeding troops.
Yeah, I'm trying to think about not calling out too many names here, but we probably know who they are in Australia.
Yeah.
Or a feedlot, or I'm a single origin bespoke, bakery, for example.
Yes.
Everybody has a slightly different problem from their perspective, but the underlying theme is I need to have trust and transparency in my physical product, and that has to be matched by the data that is attached to that physical product.
Yeah.
Now, that data is not really physically attached, obviously, right?
No.
So what is it attached to? It's attached to the digital twin.
Yeah.
And so when the physical product moves through the system, the digital twin moves with it.
Yeah.
And it's that digital twin we rely on, actually, to give us the trust and transparency.
Wow.
So that's what we do. It's been that's a really long explanation.
No, it is, but it's fascinating, isn't it?
Payments and security, that's part of it.
Like, just think, the three of you got your heads together and figured out these problems, and they're just very complex in a way, aren't they?
It is complex, and I think it, I guess it's taken 3 lifetimes, right? It's taken 3 of us, and we're not spring chickens anymore. So, no, we're not. I'm not. Therefore, it's I think it's about 85 years of combined experience that we have in the grains industry directly. And we've operated in many of those roles. All 3 of us are farmers, today.
Yeah. So you understand some of the root issues around
we've been
trading
there.
grains,
we
selling
are
grain.
there. It is us, and, we use our product.
Yeah.
We also recognise that there's a real changing face to supply chain because we're part of that. And we want to make sure that change, when it transforms into opportunity, is available to everyone in the supply chain, not just larger incumbents or big players.
Yeah.
But there's a kind of a levelling of the playing field, which digital does, right? Digital is often used in the same sentence as democratisation.
Yeah, it makes everything.
That's an aspect that we hope we bring.
Yeah, so it kind of provides equity across the system, no matter how big or small you are.
Yeah,
right?
I think so. And I think the big contribution that we can make is democratising access to capital. So if you are no longer just reliant on your credit history or having 5 years of business records or, mum, dad, corporate or whoever guaranteeing your
situation for a period.
Yeah, because you have collateral that you can put up and that collateral is trusted, then you can do inventory finance in a whole new way. And so alongside what we've built in terms of, the Agtech component of the platform, there's a fintech component backed by a supply chain finance fund. And so we also have capital that comes into that fund.
Yes.
And increasingly, what we're trying to do is bring new and alternate capital that could not invest in the supply chain and to be able to present supply chain as an asset for investment.
And this is a big issue, right? Like I've seen over my, short career that in business, right? Particularly in the Australian banking sector, and I'm not having a go at the banks because I used to work for one of the big ones, but traditionally, banks have always lent to business on hard assets. They love land and buildings. Yeah. And they talk about serviceability, but very rarely do they lend heavily on inventory and cash flow.
Yeah, I mean, to be fair to the banks, and I'm on record not being fair sometimes, but to be fair to them, they like what they know.
Yes.
Right. That's what they're prepared to back. They back what they know. They know land. They know buildings. They know machinery.
Yes.
Right.
Yes.
They understand that very, very well. They understand repeatable, reliable cash flows.
Yes.
And so that's easy for them,
Yeah.
and easy for the credit model that underpins effectively the banking
Yeah.
system.
Yeah.
What we're talking about is more transforming uncertainty into something that is trusted and can actually be collateralized because there is a true asset there,
Yeah.
and being able to surface that in real time and transform that into a finance product.
Yeah.
That then, if you're a farmer, for example, back to your example before, I might have grain, I'm holding on to it. If I need cash flow, previously all I could do was sell my grain.
Yeah,
But
you had to crystallise it.
Absolutely. That's the only way I could monetize
in order to
it.
get the money, right?
Right. But if I have a forward contract on that grain, I just might need some intervening cash flow to help me until I get to that point.
Yeah.
Or maybe I just have a view on price and I don't want to sell today,
Yeah.
but I need some access to cash flow. So we can come in at that point. If you're a trader, well, you actually need finance to purchase grain.
Yeah.
But the crazy thing with the banks is the bank says, we'll give you capital to make that purchase provided you have clear title. But the trader says, I don't have clear title because I don't own the grain yet. Right. So, this creates, a funny situation. So, we can be there, and because we can do it in real time, effectively a purchase transaction can take place on our technology platform at the same time as a financing transaction takes place. So we're bringing effectively software, data and finance into one transaction and into one pipeline, instead of them being three separate endeavours with three separate industries covering them. Really that should just be one transaction, one industry, one level of effort.
Yeah. So is this a payment system, or is that too much of a simplification?
We're a payments processor, so we're able to calculate the value of the grain in real time.
Yes.
And if there is an invoice that's been raised against that grain, that payment of that invoice can be processed, through AgriDigital.
So
and we'd still be using our customers still use traditional banking rails for that.
Yeah.
We've done a lot of experimentation with blockchain and looking at different types of digital currencies and how that may evolve in the future.
Well, I wanted to ask you about that.
Yeah.
Where does this fit with blockchain and cryptocurrency?
I mean, it actually fits really, really well.
Yeah.
The reality is, though, despite how much I would like it to be different, the world is not in a place where blockchain and cryptocurrencies or digital currencies or stable coins are ubiquitous enough in order to transact across the supply chain. So we're technologically able,
yes,
but we're not ready and willing as an industry as yet.
Is that because the weight of money is behind the traditional payment systems that are sort of, largely used by the big financial institutions that have been around for many decades?
Well, the propensity of payments in this country in particular work really well. We're in a very privileged position in a country like Australia with, incredible regulation. A banking system we may rail against from time to time, but actually does a pretty good job on the basics.
Yeah.
And we have incredible rule of law backing it all.
Yeah.
But if you're in Brazil or you're in Botswana, and I'm picking countries that I don't completely know. So someone might make a comment on this saying actually Botswana is amazing, but if you're in a country where that is, if you're in the Ukraine, yes, let's choose the Ukraine.
Yeah. There's plenty of grain in the Ukraine.
There's breadbasket of the world, but before the war, Ukrainian farmers were spending 30% of their farm income just on securing their grain. physically securing it to make sure it wasn't stolen.
Wow.
Now, if you live in that environment, how many financiers want to finance that grain?
Yeah.
Zip.
Yeah, that's right.
So, that's where potentially blockchain and rather than cryptocurrencies, maybe I'll say, digital central bank issued digital currencies have a really important role to play, but we just haven't quite seen that come through despite the technology being there to be able to do it.
So is your payment process, is it modelled on blockchain? How does blockchain intersect?
Yeah.
How does that? Yeah?
Yeah, so the payments process is, we use the new payments platform, mostly in Australia. So it's modelled on how would we be able to construct real-time payment on title transfer if we were able to get to that point. So, we did look and we have executed and done a lot of experimentation with blockchain, from that perspective, from a payments perspective. So, what you want to have, and the beauty of blockchain is you effectively have the passing of title in the grain at the same time as you have the passing of the payment. So there is no delay between the two.
Yeah.
And that's what's fantastic, right? Because it just takes counterparty risk out.
Yeah.
But what I'm probably more fascinated in terms of blockchain and distributed ledger is the smart contract layer. And so that has been able to take large series of sequential workflows and been able to collapse them down into one atomic transaction. So instead of a financing workflow, for example, at a bank, could take 4 to 6 weeks in order to complete.
To complete a financing deal?
A whole financing deal, right?
Yeah.
It could take longer than that, mind you, but let's just be kind of ambitious and say 4 to 6 weeks. Assuming that you are a customer of that bank, but perhaps you haven't accessed that finance product before. Well, that's because there's 120, tasks in a sequence of workflows that need to be executed by many, many different people and, cross-notarized and, all those sorts of things.
And checked and verified. And
Absolutely. But all of that has an underlying logic that can actually be programmed into a smart contract. And if everyone then says, all of that has been verified and ticked off, then effectively you can have auto execution, which, can be less than a second.
Wow. 4 to 6 weeks to a second.
Yeah.
Just like that.
Just like that. Yeah, we actually did, it was quite a while ago now. I think it's 2017, maybe in 2018, sorry. We did an experiment with Rabobank, taking one of their structured inventory products, and I think it was 130 different tasks that, did take them about 6 weeks to complete.
Yeah.
And got it down to, I think it was like 2 milliseconds or something for the transaction. And that was not just a financing, but that was literally grain title being transferred, money being paid against grain, accounting entries going into different accounting systems. Wow. So it was the full gamut of the transaction and the after effects, if you like, of that transaction as well.
That's amazing, Emma. I mean, you've talked about grain. Is what you've been working on in AgriDigital, has that got application for other agricultural commodity products and or other products that aren't necessarily ag products?
Yeah, certainly, what we know well is grain, but we didn't call ourselves Grain Digital.
No.
So we did call ourselves AgriDigital, which, maybe is just scope of ambition. But look, I do think there's an underlying logic that can be taken to a broader set of soft commodities in particular. I don't understand, the metals environment and oil and gas and other commodities as well. But I think there's some pretty direct
so horticultural products, for instance.
Yeah, I mean, and so horticulture and meat and livestock is interesting because there's some really clear areas of similarity.
Yes.
Where the differences are is that, and where grain is perhaps more similar to iron ore, is, it doesn't deteriorate.
No.
It doesn't require a cold chain.
Doesn't have the shelf life issues.
Right, exactly. So there's a robustness to it, which we were very cognizant of when we started doing the work to kind of prepare for getting AgriDigital off the ground was that, look, although we are dealing with big licks of money, $9.5 billion is, that's a lot of money. That's a lot of livelihood there. We were not dealing with, peaches and pork that was going to go off.
We're going to go off in a few weeks.
Exactly. So that gave us a little bit of leeway, and our customers a bit of leeway in terms of making sure the technology worked at scale.
And one less problem to solve for, I guess.
Yes, one less problem to solve for. One less part of the supply chain in terms of say climate control or the higher end of the quality chain does make it a bit more difficult from a technical perspective. Yeah.
How have you funded all of this? I've been just trying to grapple with the complexity, right? There's obviously a whole bunch of system stuff behind the scenes that you've needed to deal with to make this happen.
Yeah.
From a starting position, right? Can you take us through that kind of journey?
Yeah, absolutely. So we were in the relatively fortunate position where we had exited two businesses previously, somewhat successfully. So as a group of founders, we had some capital that we could deploy, and we were pretty disciplined about that. But we did bootstrap for the first few years, and were very much of the mind that let's get this, let's de-risk this for an incoming investor, to the point that we're clear that we've got some early product market fit. I guess, we wouldn't say we had really good product market fit, but we had some early product market fit. We had some wins on the board, we had some customers, we had some early revenue.
So you did some early commercialisation, yeah?
Yeah, very
proved
early.
It up.
Very early, kind of going beyond proof of concept into, I think early stage commercialisation is the right.
Yeah, so you had a pool of people that were using it and could speak about and say, well, we tried this, we sold a parcel of grain through it, it worked for us.
We like it, we're going to continue using it, we're starting to embed it in our operations, therefore it has a level of stickiness that's important for an incoming investor. And so in 2017 we took our first external investment, and so that was when we had launched a commercial product.
Right.
And we felt that the time was right, the market was right. To raise capital at that time. In ag, the weather was right, the environment was right from that perspective.
Wow.
It was actually, I know, in Australia.
Seasonal conditions.
But that does play a part. So we thought that we had the right environment to raise capital, and we did, what we called a Series A round. So we sort of, from a founder's perspective, we saw ourselves as seeding the business.
Yeah.
If I had my time again, maybe labels seem to matter a lot, and so maybe I would have labelled that differently if we were to go back and do it again. But we called it a Series A round, and that was a $5.5 million Aussie round, which I think at the time, and it just doesn't sound much now, but I think that was the biggest Agtech round in Australia at the time, at that at that Series A level. And that was led by a well-known family office out of Melbourne. They do like to remain private, so I won't mention them.
No, that's fine. That's fine.
They have assets in supply chain and food and packaging and things, so that kind of made sense from their perspective. And they were, I think, really far-sighted, because we might come back to this, but as it turned out, we were quite early. We were earlier than we thought we were, and we thought technology would move faster. And adoption would move faster on the digital side than it in fact did. So we might come back. We might park that and come back to that.
I understand.
Yeah. So they were very, very supportive, and so they led the round. And a venture capital firm, Square Peg Capital, came in alongside them.
Right.
And Square Peg's been a fantastic supporter of ours. And we've done another round that Square Peg was part of, and in that second round, we raised from another, a family office associated with a large hedge fund in Australia. Okay. And that gave us access to debt as well as equity, which has enabled us to then bring in, well-disposed and aligned debt into our our debt capital structure on the supply chain finance side. And that's it.
So
we're
a family office hedge fund,
family office hedge
family
fund.
office in Melbourne, and Square Peg Capital. But how did you arrange all of that? Did you do it yourself? Did you lead that as part of the team? Did you have others advising you? How did you bring that pool of investors together and kind of shake their wallets? And
so the first time round in 2017, I guess you don't know what you don't know.
No.
And so I just thought you did do it yourself.
Yeah.
And so I just,
I kind of like that, though.
Yeah, I just was like, okay, well, we've got to raise some capital. I put a pitch deck together and I went back and had a look at it the other day, actually, and I was like, oh, goodness, that's quite embarrassing.
Why was it embarrassing?
I think
it's not like the colours of the presentation.
Yeah, the colours were somewhat garish. The images are somewhat stock. Yeah. The words are, just seem... I think they come across as honest. That's probably what I'd look at them now, and I'd say, that's a very honest-looking presentation in the sense of it's not tricked up. No. It was pretty simple.
What was the essence of it, though? And sorry to interrupt your flow about how to get these people together. We need to go there. But what was the essence of that presentation? If I was to read it, the elevator up the escalators message, what was it?
I think the essence of the presentation was, here is an opportunity in a supply chain that actually underpins the world, right? The food supply chain, the agri-food supply chain, that is not well understood, that is a multi-pronged problem that requires deep domain expertise, which we have to solve, and which is ripe and ready for a digital wave. Yeah. And we've had an insight. We're here at the right time. Yes. We understand the problem. We need some help from a capital side to build out the solution. But here's what we're going to do, and here's the size of the prize.
And so there were projections there about...
Yeah, there were, and they were overly optimistic, as a lot of...
As you kind of intimated, in terms of timing, the take-up was probably, your assumptions on take-up were near term or nearer term than actually.
Yeah, absolutely. And I think we raised capital at the end of 2017. I think we had one really good year from an environmental perspective and went into a drought. We then went into, it's been kind of somewhat biblical. We went into a drought. We had bushfires, like incredible bushfire season, if you remember, that was really harmful to a lot of our customers. We went into floods. Yes. Really bad floods.
And the mice crept in there somewhere too.
We had a massive mouse plague. We had a massive mouse plague. And so, literally we had a pandemic. So I would, to say it's been tough would be an understatement from that perspective. And so when we put our forecast together in 2017, I think we kind of said, hey, look, 1 in every 5 years...
There's going to have one of these events.
Yeah, there's going to have one of these events, and we've had kind of 4 and 5. So
it's a bit tricky, isn't it?
That does make it tricky, and it does require, therefore, investors, back to the investor piece, who you can be open and honest and have a trusting relationship with, and to a certain extent have some patient capital, particularly in the Agtech space.
So you herded these 3 investors,
yes.
together.
So I had a list. I made a list, and my list was... for anybody who's looking at doing this, I don't know if this is the way to do it. I'm not giving advice. This is more of a description of what I did. But there was traditional venture. Yes. There were family offices. Yeah. There were strategics. And then I guess because we knew we were looking at a banking and finance problem down the line, that wasn't the original proposition. The original proposition was build out technology platform and then put finance on top of that. Yeah. But we knew that's where we were going. So then there was kind of banking and finance, partners alongside, and then there was actually what would have been called early stage impact. It wasn't really called impact investing then, but what we would now recognise as impact investing. So I sort of had these different groups of potential investors, and just did my desktop research and made out lists. And then I literally rang samples of each of those groups and did a quick kind of phone pitch.
Yeah.
Followed up by a short deck,
Yes.
via email.
Yeah.
To gauge interest.
Yeah.
Do you think you're a good match for what we're doing? And I thought what was going to happen was one or two of those groups would emerge as the best fish.
Yeah.
And what actually happened at the time was everyone was interested. Agtech was very much the
flavour of the month.
The flavour of the month.
Yeah.
It was very much the trend, on trend. And so, there was a huge amount of interest in what we were doing. And we were early stage, and that was attractive. From a variety of reasons, but valuation, entry point, being able to take a sizable piece of the cap table, etc. So I then found that I had too many investors to get around. And so I resorted to the age-old, I'm going to deal with people I like.
Right. How do you classify who you like? It's just a fit in terms of relationship.
A chemistry piece,
Yeah.
that I thought was, people I could work with.
Yeah, okay.
And I think because of Ben, Bob, and my backgrounds, we kind of had a no idiots policy. We said it a little less politely than that, but we wanted to work with people that would be inspired by us and we would be inspired by. So, that was part of the premise of starting AgriDigital, was not just to solve the problem, it was about how we were going to go about solving it and how we would make sure we would enjoy this journey.
Yeah.
Knowing, and we knew in 2017, and we told investors at the time, this is a 10-year journey. It's going to take us 10 years.
Yeah.
So we're 6 years into that 10 years now. So, you're going to be at it for a while.
Sorry to interrupt the flow, but those three investors you talked about, the initial three.
Yes, yeah.
They're still on board.
Yes.
Yeah.
Yeah.
And why are they still on board? Because you've had 4 of those 5 years that have been really tough. So
Yes.
how have you spoke about trust and communication before. Has that been a big issue in kind of, bringing them along, or were they always fairly long-term focused when they came on?
It's been iterative, and at times we haven't done a good job at it,
Right.
and we've learnt from that. Because you then, you want suddenly their help to solve a problem, but you haven't been as forthcoming as you could have, as one could have been throughout the journey. So I think we've learnt how, and I've learnt in particular, how to be better at that.
What's the key learning? Is it telegraphing like the outcomes in advance?
No surprises.
No surprises.
No surprises. Being confident in what we're doing, so that when things don't, so maintaining the rage on that, on the vision and the problem, because we know even when things go wrong that we're still heading in the right direction, right? But sometimes when things go wrong, you can go into a spiral. And I can't do that, and I can't let the team do that, and I have to be able to project the confidence to our investors whilst at the same time acknowledging the challenge. But it's very easy to get sidetracked by the challenge and lose the confidence in the conversation with investors and, with the team members and with customers as well, right? You've got to be able to balance both, because there's no point just being confident and not acknowledging problems and challenges and, that's just that's almost like overweening pride or narcissism.
I think that's a really interesting dynamic, though. We value businesses and provide advice to a range of different business customers, and I see elite business owners, and they understand explicitly the risks of their business and how to manage those, and so I can talk to them about evaluation of the business, and from an external perspective, what I see is the risks in the business that a purchaser or an investor might see. And their eyes sometimes glaze over, right? Because they're so close to it and so attuned to what's going on that they see that risk very differently. And so it's tricky, right? When you're bringing in investors that don't have the presence in the engine room and the full perspective and capability, but they want a return for their risk. So kind of matching those two elements to get the outcome, I guess, is the challenge.
Yeah, and I think, I try to empathise and put myself in the position of our shareholders and any potential investor, but I don't do that in such an overly critical way that I lose my confidence in what we're doing.
Yeah.
But I have to have a dose of realism in my confidence as well. If you haven't hit a revenue target, or you've put forward 2 forecasts in a row and you haven't hit those forecasts, I mean that's a reality, right?
Yeah.
Now it could be that we're really lousy at forecasting. That could be part of it, or it could be that it's external factors, or a combination of all of the above.
Yeah.
But I have learnt through. I've learnt so much from our investors, and I've tried to open myself up to those learnings, and sometimes they're hard, right?
So what are those learnings though? What are the big tickets from your investors? I mean, you're putting yourself out there, right? You could have, maybe not, but I mean, it must have been hard in those initial days because the three of you presumably owned the business,
yes,
right? So, by going to the market with those first 3 investors, you had to contemplate, well, how much of the farmer we prepared to sell to realise our journey, or part of our journey. That must have been a kind of a tricky process, yeah? Was it? Or not really?
So to begin with, we had 2 investors to begin with.
Okay.
And then the third investor came in last year, actually. We raised some capital last year, and they came in as part of a debt and equity round as we were building up our supply chain finance fund. Yes, we have 3 main investors on our cap table, plus the founders, and of course our employee share scheme as well. So, I think I think in terms of back to the kind of working with people that you respect and that you can learn from, and that's been part of it. Is that choosing. Like, I try to think about choosing an investor in the same way as we would recruit a team member.
So the expertise that you were recruiting in those investors, was it stuff you didn't have?
I think it was. I mean, absolutely, yeah. We always, I always want to plug my gaps. And the older, it's age-old saying, but the older I get, the less I realise I know. So, I think we first met when I was in my late 20s, and boy, I knew everything then, didn't I?
Well, we all did.
So, and I remember when sidebar, but I went and did my MBA, and I mean, this is just so embarrassing, but I remember thinking, it's a bit of a waste of time. I mean, I kind of know all of this. But good initials to have after your name, right? And what didn't I know when I did my MBA? Well, one of the biggest things I got out of my MBA was the network of relationships, the ability to call on people who do have deeper expertise than me. It wasn't so much the professors and the curriculum; it was the experience, right? That journey that I went through, and I guess I would analogize that to the investor piece.
Yes.
There is undoubtedly some people you get on with better than others in life. It's not so much about that, but each of our investors or our shareholders brings something different to AgriDigital.
Yeah.
I'm not doing my job if I don't open myself and the business up to take advantage of that.
Yeah.
I have been cautioned and asked by our investors sometimes, use us more, Emma. Don't just use us for our capital.
Yeah. We've got expertise. We can bring some ideas to the table. Yeah.
But it's actually, and at first I thought it was their job to offer it, right? But it's actually my job to work out what I want.
To unlock it.
Yeah. To what I ask for.
Oh, I love that.
Yeah.
I love that.
So I think, and I've learnt that it's not just shareholders and investors. I mean, while we're doing shout outs, we have had some really great early support from Austrade, for example.
Yeah, okay.
Now, Austrade's an amazing organisation, obviously an arm of government. It's no use if you don't know what you want.
Yeah.
But when you know they're so ready to help.
Yeah.
But if you don't know what you want, all the help in the world doesn't matter, right? You know, it just can lead you down the garden path, or it can waste time, or, you know, whatever it may be. So, you know, I've tried to be much better at being focused. And I'd say that it's the investors that have really helped us bring out the focus, either by putting constraints on the business, by putting pressure on me, potentially, as a CEO of the business, and by asking hard questions. And, you know, that is not always a comfortable place to be.
No, it's not. But you say, you know, you wanted to work with like-minded people.
Yeah.
Both the three of you, Ben, Bob and yourself, but also the investors you chose. So like-minded, but also, you know, prepared to say what you think.
Yeah, so I think it's, you know, the definition is who would we want to sit down and have dinner with and enjoy, you know, breaking bread around the table.
Yeah.
But who can then walk into a boardroom and bring value. And in the early days, I thought that was about supporting me.
Yeah.
And maybe it was, but now I think it's about challenging me.
Yes. Yeah. Yeah, that's great. Has there ever been a time to date where you've thought, or the three of you have thought, oh gee, it's a big Everest to climb. Are we ever going to get there?
Oh, absolutely. Yeah. Absolutely. I mean, you know, things are, it's the old adage, right, isn't it? It you know, in tech, it takes twice as long and costs twice as much.
Yeah.
You know, maybe 3 times. It's, you know, it's definitely true. And so we all have dark moments where things aren't going right.
Yeah.
But, you know, don't do this if that's your default position, because it's going to lead to a very stressful existence. That doesn't happen to be my default position. My default position, you know, generally is the world's full of opportunity. You know, have I positioned myself and the business correctly, you know, into that? Let's take a break and think about how well we've done.
Yes.
Because there's always challenge. There's always more to do.
Yeah.
It never seems quite good enough. You know, like, we're immensely proud of what we've done, but it's never enough.
No.
And I don't think I ever look back on anything I've personally done, or, you know, in this business or others, and I would say that I thought it was the ultimate, it was the best, and it couldn't have been bettered. Yeah. So, yeah, but that, despite that, that's not a black hat position for me. That's a kind of like, wow, the world's our oyster, right? You know, there's so much more we can be doing, but there is a discipline, there is a focus, and there is also understanding what we want from this part of the journey as well, and being able to make sure that I'm living that. Yes. And, you know, not... Like, I didn't start AgriDigital with Ben and Bob to be a slave to AgriDigital, right? So you know, that's if I feel like, oh God, I've got to get out of bed and do this thing, you know, I probably better stop.
Yeah,
right?
It's sort of got to a point.
Yeah, so it's not like that at all. It's just that it's big. It's big. I mean, the global grains industry, the global grain supply chain is $1 trillion supply chain. So, you know, it's huge. We're never going to take $1 trillion and own it all. That's not what we want to do. And in fact, one of the biggest challenges in doing what we do is trying to collaborate.
So $1 trillion, and you're 9 billion that you've transacted through your system.
9 billion sounds big till you say $1 trillion.
$1 trillion sounds quite large.
The trillion's the global.
It's a global industry, right? But the grain industry is global, right?
Yes.
Because, you know, anyone that knows about grain in Australia is, you know, we're a major player in the global market.
Yeah.
Does that mean that AgriDigital is eventually, you know, set to spread its wings far and wide beyond Australian shores?
Yeah, so we operate in the US at the moment as well, with some customers over there. I think what we have learned is, rather than growth through going into a market and trying to acquire customers, our better growth is actually with our customers. Yeah. And so the virtue of working in the industry that we do is that, you know, when you have a look at particularly those in the mid-tier of the supply chain, so traders, processors, storage operators, shippers of grain, etc.
Yes.
Most of them are global in operation. Either they're transacting at a global level or they actually have, multinational operations themselves. So, it's really normally only the farmers that are, solely domestic.
Yes.
And some of the smaller private storage operations that are quite domestically focused.
So by definition, you're international.
Yeah, well, and if we can enable our customers to access and have confidence to grow into a global market, then we can grow with them. We've earned the right to grow with them.
Exciting,
yeah. And that's, I think, a better, I guess it would be called an organic growth strategy.
Yeah,
right? Back
exactly.
in the day, so that's probably really uncool and not so trendy because organic often means slow.
But it can grow very quickly, right? Because you've commercialised a process which can be adapted worldwide.
Well, it tends to be more reliable, more sticky, and based on true value.
Yeah.
So, then I have a lot of confidence in that type of growth.
Yeah.
And I'm not just growing to try and acquire revenues.
No.
I'm growing to build revenues.
Yeah, understand. The young Emma at 19, did the young Emma ever think that you would end up doing this sort of stuff?
No. So, no. I've had the most serendipitous career journey, I think, in that, the only thing that I recognise probably in that younger Emma in some ways is, avid curiosity and a love of learning. I think I've carried that with me. And an openness to, I think she was an opportunist and I'm still an opportunist.
Yeah,
and I think that's a compliment, by the way. So, and
well, I think you're right.
And a pretty healthy, attitude and appetite for risk.
Yes.
Although I probably wouldn't have recognised that in myself at 19, but when I look back now, I realise that's partly what opportunism is, right? It's being willing to take a risk.
Well, it is, and to the extent that you've developed a product based on risk or a company based around risk,
actually,
right?
I kind of love risk in a way, right? But no, at 19, who am I? I'm a girl from the burbs in Melbourne.
Yeah.
I didn't grow up on a farm. Like a lot of Australians, knew someone who owned a farm, or I had grandparents who owned a farm, or great grandparents, who owned a farm.
Yeah.
But so you didn't have to scratch too far, and there was some connection to rural Australia. But my dream at 19, I think it's still my dream in some ways. I've always wanted to be a writer. So
a writer.
Yeah. I do write. I don't publish, but
okay.
so I think
What do you write?
I write all sorts of things. So these days I write a lot of just kind of reflective material and thinking back on things. And we talked earlier about the accident that I had. So I've written a lot about that accident.
Have you?
Yeah, and just some of it's just descriptive. Like literally.
My experience is following a horse kick.
Yeah, this is what it's like to, this, lying in a paddock, right? And trying to work out how to get myself up off the ground and, which bits are broken.
With multiple breaks.
Yes, and all that, so just like some of that was just, I guess, some processing. I write a lot of, I guess it would be quasi-nature writing. Yeah. So I write a lot about the natural world, trying to kind of make sense of the natural world. Yeah. So that was something that I've always done. And then, when I was 19, I was at university.
So you studied law at Melbourne, right?
Yes.
Melbourne Uni?
Yeah, that's right. So I wanted to, and I think I was still in the throes of wanting to be a barrister.
Yeah.
At that time.
Would you have been a good barrister? Do you put good arguments? Like around the board table, are you the barrister type, or are you the...
Yeah, no, I think I've evolved into being a better listener than a talker, actually. So I don't think being a barrister would necessarily... barristers might say it's all about listening and the way that you can then, I think what I'm good at, which might have been good as a barrister, is I'm quite a good synthesizer.
And, my involvement with barristers over the years on various commercial and legal matters really, that's the one thing a good barrister is absolutely supreme about is taking a lot of complex information that, you know, and a good business owner is good at this as well, right? And synthesising it down to the key aspect that matters.
Yes.
Or not.
Yeah.
Right? I mean, obviously they wash that over with the law, so to speak. But I think in business it's critical, right? That skill.
Yeah, and I think, like, you know, law is about problem solving.
It is.
So, you know, that's something where I guess that was my first outlet for problem solving. What I just quickly realised was I didn't want to solve the same problem again and again and again in a template-driven way. Or if I was going to do that, I wanted to create the template.
You wanted some creativity around it.
Yes, yeah, absolutely. And I wanted to do that in a way that was empowering for others and enabling of others. And I didn't find that in the law at the time.
Yeah.
That just might have been my experience, but I found it quite black and white, and I found it enabling for lawyers sometimes, but not necessarily for their clients.
Yeah. Yeah.
And that bothered me just at a social level.
Yes.
There was a kind of a social equity piece and a divisiveness of being a lawyer and being higher than your client.
Yes.
That didn't sit well with me, which is probably a really old view of the law now. But
well, I think it's still a view of the law, yeah?
Yeah, but I'm still fascinated and keep up in my own way with,
Do you?
different legal stuff going on. And
has it helped you in the business, having that background?
What did help me was when I decided to move out of private practice, I was, the Australian Wheat Board was looking for a junior lawyer at that time. They were corporatising, privatising and eventually going through a listing. And I was lucky enough to get that job, and that seemed to make sense to me, to leave private practice to go into a corporate in-house but still be a lawyer.
Yeah.
I was a bit of a people pleaser, and so I think that felt explicable to my parents, right? That I could explain that this was actually a really positive career move. I'm not going to go, I'm not going for partner track, but, I'm going over here to do this.
Mum and Dad, it'll be all right.
Yeah, and
they're a credible company.
They'd paid all of my HECS and everything, so they'd definitely done the right thing by me and my education. So I made that transition, and that was really my entree into agriculture and into the grains industry. And I think I was 23 maybe at the time.
Yeah.
So that that was my entry point. But what I learnt, really the hard way with a lot of red ink was how to draft and how to write simply and concisely, and the power of taking out adjectives.
So communication, but written form communication.
Simple.
Which you still practice, right?
Simple.
Yeah.
And I sometimes I like to write with adjectives, but quite often the writing I like best is quite sparse. I think one of my first tasks when I got to AWB was to take what was a 30-page agreement and the challenge I was given, not just through reducing font, was to take that down to, less than 10 pages. Because as we know now, no one reads 30-page agreements, right?
So I want to pick that up because, in the world of social media, there's a question about whether writing is still a thing, right?
Yes.
You're kind of suggesting it is.
Well, it is for me. Maybe it's a personal thing.
What about in business, though? Because what's your experience? I mean, is that writing piece still relevant in your business, in AgriDigital? Is that communication aspect
it's part of the way I think. So to me, if I couldn't write, I couldn't think.
Yeah.
Or I wouldn't think in quite the same way. So it's important to me, but, that's part of the way, I process and I learn and I communicate. That's not for everybody.
No.
So I don't kind of hold that as a tenet that everybody needs to have. But I do note that often when we hire, I'm going to sound so old, but, younger people into our organisation, they struggle with written communication.
Yeah.
It seems to be a lost skill.
Yeah.
And maybe it's not a necessary one anymore, but I think it is one we're losing.
It's one I focus on a lot because we hire a lot of people early stage out of uni, and there's a real mix of of skills as you've intimated, and certainly the written skill is not as well developed as it might be from a perspective of a person with a few years under their belt, so to speak. But you know, I don't know. There's varying degrees. We still find in our business, when we're trying to educate and communicate around valuation and around business advice, that certainly the written form is important.
Yeah.
But get to the point.
Yeah.
So to speak.
Yeah.
Get rid of the fluff. And so some of that is good, you know.
You know, I think I quite like summaries, so I don't mind having the fluff, because sometimes I like to go into that, but I quite like, you know, thoughtful ways of presenting ideas so that I can get the quick snapshot.
Yeah.
And then if it really intrigues me or I need to know more, I realise there's a gap in my knowledge, I can then, you know, kind of
go further.
Yeah, like you know, drill down on it. So, you know, I quite like that way of writing. I don't like seeing big blocks of text, right? Because I think that becomes impenetrable, and I do think that we've moved on as a world. We don't like looking at big blocks of text without understanding really quickly how to navigate that.
Yeah.
So I think there's writing and there's writing.
Yeah.
But there's also writing just for yourself, and not, you know, if we think writing is always for someone else, or is always to produce something, or as a byproduct of, you know, is a productivity task, then I think we lose just writing because it's lovely. Like, you know, I mean, there's been a resurgence in journaling.
Yeah.
You know, and I think a lot of that was probably happening during COVID as well, which I think is great. You know, I love it. I don't actually journal myself. But
no, but are you suggesting that writing for you is a self-development, perhaps self-reflection method?
Yeah, I mean, it gives me an objective view of an interior piece, right? So, you know, I kind of write almost in the third person.
Yes.
About thoughts that I'm having, because I know that thought. I don't have to write it down if it's in the first person. I've just had the first person thought.
I get that. Yeah.
So, you know, but to put it from a third person perspective gives me a level of objectivity, which sometimes makes me realise I'm being ridiculous.
Yeah.
You know, or melodramatic, or no, God damn it, I'm right. you know?
I get,
And so, you know, it sometimes provides a level of companionable insight to my interior world.
Yeah, that's nice. Now talking about reflection. So I'm actually having lunch with a family friend. She's 23. She's studying
today.
Yeah. She's studying. She's studied international relations. She's done an undergraduate degree. She's just doing a master's. She's got a first internship, and with an international business lobbying group. Knowing what you know, and we talked about you being 23, out of uni, you know, just moving roles, you know, thinking about that person, what would you say to them? What have you learned over the time? What would you be your advice? You know, in terms of a journey, someone in that stage of their career, looking to perhaps go into a business environment, but you know, what have you learned, Emma, that you would reflect back on? Oh,
my biggest learning is that time is not as precious as we think it is.
Okay.
You know, and if I could do anything, I would slow down a lot of things that I did very, very quickly. So I would say, I tell that to young people all the time who do, you know, far be it from me to give advice, but, you know, if they do want something from me, you know, in terms of a kind of a life advice piece, you know, you think you have to rush at everything when you're young, you know, younger. So I just don't think that's true.
Yeah.
I think that is, I think it's a complete fallacy that you need to be fast and furious, and that things are not worth it if you're not working like crazy hours, or I actually think that slowing down gives you the space to work out, what you really want to do and to soak up what you are doing. And then I think the other thing is that, there's lots and lots of things you can be doing in this life. And I think there is an argument when it comes to all of the different opportunities that can come your way, that quantity is better than quality when it comes to opportunity. I think you should take up numerous opportunities, experience and experiment in numerous different ways, and some of them will be, no good, and some of them will be amazing, but you'll be able to look back on a bundle of experiences at the very least, and then be able to pick a path one hopes to go forward with. So you don't need to pick your path at 23, right? You just need to have the confidence that you can accumulate a bundle of experiences that will help you pick a path at 33 or 43, or I feel like I'm still picking my path.
I love it.
So I just don't think it's, I just hope that, I love it when I see younger people operating confidently in the world, and that's it, without necessarily an objective, but just being confident. I don't think it's easy to be confident. No,
because it requires, a good understanding of self, right? But I love your reflections there. It's sort of, in a quick summary, have patience and enjoy and savour the journey, because it'll take you to all sorts of interesting spots.
One hopes so, doesn't it? That like if the journey is only taking you in one direction, what sort of journey really is it anyway?
Exactly. Emma, thank you for joining us on Let's Talk Business.
Thank you, James. I
really appreciate it.
Wasn't it
was
fun?
lovely.
Yeah, it was good.
It was great.
We traversed everywhere.
No, it was fun. It was fun.
I enjoyed it too. Thank you.
That was Emma Weston, CEO of AgriDigital and one of 3 founders, and a fascinating discussion about starting up a technology business focused on the grains industry and improving the payment system and processing and productivity in the sector, and also moving into the fintech sector, raising finance, raising equity to support the business as it grows. A fascinating journey, and lots more to come. Thanks for tuning in to today's episode. If you enjoyed it, subscribe to this podcast and follow us on Instagram at JamesC_Price. And if you're up for improving your business, gaining access to knowledge, insights, our team, and consultations, join our online membership portal. Visit jpabusiness.com.au.